You are listening to ChartingWealth.com for Wednesday, the 30th of November, 2016. Let's jump right into these charts. What do we see going on? Well, the market is backing up a little bit on us. We see that the total market has penetrated the two-day trend line that was going up. We have a red down candle that's been forming. And again, it's just the first day of that down candle, but what we see happening is we have a red open box candle with a wick on top, so it's not a strong down move, but it is a bit of a backup underway. We have broken our two-day trend line. We're still well above the weekly trend line. If we look intraday, what do we see on the 4-hour chart? We see that the market has been sliding sideways. Actually, it has not yet penetrated on the 4-hour chart. It's not yet penetrated the 2-day chart, but we do see that a serious backup is underway. That actually started over the course of the past day in the afternoon of the Monday the 28th, and we really just sort of have a sideways slide. What are we waiting for? Well, we're waiting, hopefully, for the market to turn around and start going back up again, cross over on this 4-hour chart, and give us an entry point for continued up movement. Will that occur? We don't know, but we're waiting to see if indeed that does happen. The market may just be digesting some of these gains and may turn around and start going back up again. What's the other choice? Well, of course, that the movement down is strong enough to pull everything over, but we're not seeing that yet. For the record, IYY was up for the day 0.17%. And again, we're talking the average pace kind of candlesticks. We use the Heiken Ashi. We like them because they give us average pace changes. Even though the market was up, technically the average pace down. That's what we're looking for. Okay, let's look at the S&P 500 on the 2-day chart. Looks very similar to the total market. It's broken through the 2-day trend line, still above the weekly trend line on the 2-day chart. See derivative oscillators losing energy, and that we don't have, well, we still have a continued spiking up PPO, that is the price percent oscillator, but it's not as strong as it had been in the past days, particularly after the election up until about the 22nd or so of November. Now let's check out the 4-hour chart. Looks very similar to what we see in the total market. It's actually sliding sideways, continuing to angle down. That backup is in full swing. The derivative oscillators also rotated over in the negative. Okay, and for the record, SPY was up for the day 0.20%. Now let's go to the Qs, which is the NASDAQ 100. It was up 0.35%, the most of all three of the indexes, but it too had actually started below the 2-day trend line, but closed above it. We do have, of course, the up movement since the crossover on the 22nd. We had up movement prior to that. We had the crossover on the PPO and the derivative oscillator back on the 22nd on the 2-day chart. And it's been ticking up slowly since then. Don't forget, on the NASDAQ 100, we're still in a long-term down move on the weekly chart. 2-day chart's in an up move. Now, if we look at the 4-hour chart, what indeed do we see? Well, the 4-hour chart is still in a confirmed up move. We haven't had a crossover going down yet, so we haven't seen that backup happen for us. We like, again, our rule is we like to see a crossover on the 4-hour chart going in the opposite direction of the big moves. And again, we even have conflicting big moves. Big chart, that is the weekly chart going down, 2-day chart going up, a bit schizophrenic, so it's hard to make any call at this point on the NASDAQ 100. And what do we do when we can't make a call? We don't lose money. We hang on to our virtual funds, because we only do virtual trading. We're not a stock calling service. We're an education firm. We want you to train with us. We want you to practice. Once you get good, you can make up your own mind how you want to spend your money and what you want to invest in. But when we have the market doing what it's doing in the NASDAQ 100 right now, we wait. And folks, there's nothing wrong with waiting. There's a lot wrong with losing money. We want to wait until we have the most things going for us. So we'll hold off on anything on the Qs at this time. Now, lastly, let's look at gold, down 0.47% for the day. Remember, we've been in a long-term down move on gold for many weeks, actually, since the crossover going down back in July, at the end of July, beginning of August. Gold has been in a confirmed down move. It did pop up briefly on the 2-day chart back on sometime in early November, but what we're looking at is this weekly chart has been in a confirmed down move for quite a while, and the 2-day chart has been in a confirmed down move again starting on the 14th of November, and it has been going down quite substantially, although it does look like over the last few candles it could be bottoming out. Now, what is our real trading chart in gold? Well, of course, it's the 4-hour chart. What do we see going on there? It's actually crossed over going up, even though it was a down day. It was down in the morning, a little up in the afternoon. We actually had a crossover, and that crossover started toward the end of the prior day, actually confirmed in the morning, and down some though, although technically gold was down about 0.5%. We had a crossover on the PPO. Now again, doesn't hurt to virtually trade these things and see how well our 4-hour chart is going to work. It has done us right in the past, so we shall see just what happens. It's going to have to defy a lot. That is the the weekly trend line and the 2-day trend line. This 4-hour trend line is going to have to do a whole lot as far as building itself up. We'll continue to watch, and as soon as we can draw a trend line on that 4-hour chart, we will do so for you. That is where we ended the markets on the 29th, Tuesday, as we go into the 30th, Wednesday of November. We so appreciate you being with us. You appreciate what we do. Let us hear from you. Go to chartingwealth.com. Sign up for our newsletter. If you really appreciate what we do, want to help us out, go to our YouTube channel and subscribe. And please go to iTunes. Subscribe to our podcast there. Give us a 5-star rating. Say something nice about us. It's a little reciprocity if you appreciate what we do for you. Lots of good training at the website, also at iTunes, also at YouTube. Thank you so much. God bless from chartingwealth.com.